Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to quick stock market analysis for the next day, that's November 10th, tomorrow, Friday, 2023. So we had another flat close, stiff resistance right there on both the indices. Let's see. If you don't subscribe, please subscribe and share to friends and colleagues so that we just out to next. Let's get in the charts right away. We'll come back to the quick market wrap-up bullet points later. But here we go into the charts. So this is a daily chart that you see here. That's what we are. Look at today's candle. It's a wide range bearish candle actually, right? Market tried to move above the previous hammer. We discussed that market is at a resistance. We discussed that the small body indecisiveness that is seen on the candlestick, especially hammer on the top, could be a potential reversal. That's exactly what has happened. So daily charts we are seeing, and so market exactly facing resistance at 50 exponential moving average while it still maintains 20 exponential moving average. Look at Nifty. We talked about another hammer, and that's exactly what happened. It was a down move primarily. And finally, it recovered and then managed to have an inverted hammer. The inverted hammer at the top of the rally could be a potential reversal of the ongoing trend if there is a confirmation of a price move below the this hammer candle's low. Right. So it's a Bank Nifty we're talking about. So Bank Nifty managed to close green, but yesterday it managed to close red. Today Nifty managed to close red. But yesterday Nifty managed to close green, so it's the other way around today. So let's go back to the Nifty once again and see. So the first resistance would come in at the 19445 because it's a 50 exponential moving average. It has to be cleared. Now we can see that there is a trend line that's red in cover that's touching this midpoint, previous swing highs, and then the top all-time highs, and then that's right there at 540, right? So that's what the real resistance is, right? Even before that, you have the resistance that's coming into play at the 50 exponential moving average. So that's exactly where it got caught today, right? Similarly, Bank Nifty, 50 exponential moving average. It moved very close to that and then reversed, still taking the support of that. So the first levels to watch on the upside would be these ones. That's the 19300, 19400, 500. These are all resistance zones, and 550, 19600. So once it crosses above the 19880 or 850, that's where the price action lower high pattern gets negated. So until then we have trouble. But it was a good reversal that has happened after this vertical fall of nearly 7 to 9%. Good attempt to reverse. Now it is basically consolidating. So if you just switch on the Bollinger Bands, you can see market is started consolidation. Whether this consolidation will turn into expansion on the downside one side, we never know. But as of now, the up move has been paused because of the resistance, and then there is a sideways consolidation on the daily charts that you can see. Levels to watch on Bank Nifty would be the same. The 44,100, 44,000, that zone is major resistance. Then 44,200, 42,500. Downside supposedly 43,300, 43, and then 42,500. So Bank Nifty, this is where the 42,300 is. Before that, there is a 20 exponential moving average coming at 43,500. So this zone is a support zone. That's breached. This zone is support zone. If that is breached, then you have difficulty until 42,600 and then goes to 42,000. So that means it's a clear lower high pattern that's getting played out once again. Upside, we know that we already seen this price action point could get negated if price moves above the 47,700. Until then, we have trouble. We may be consolidating, and bears may be attacking back, bulls may be fighting. So intraday, look at what the price action has happened today. Nifty Bloody volatile is what you can say. 9 up, V shape, inverted V shape, then downfall. Stiff resistance, highly volatile, right? And it feels relatively okay. But look at this. Look at these swings and sudden reversals up. So Bank Nifty actually attempted much more than Nifty today, but fell in price. So very stiff resistance, and market is shifting to consolidation. Is what you can see. Fyers are selling today also. Since months, 16, 17 weeks they are selling. They continue to lose. They had reduced the selling yesterday to some 85 crores or something in the cash market, but today it's even more, 1,700 or something. Right, 1,700 crores of selling, but they are still buying. The Bali money is flowing into the mutual funds, and then domestic institutions are still buying. Overall, US markets are showing some green, but dollar is spiking. So, crude is falling. Luckily, gold has cooled off after that big breakout attempt. Technically, the walks, the charts are still weak. Momentum is, if you see the momentum, you can see that momentum is still sideways and falling and attempting to rise again. Bank Nifty sideways and falling. So it's still not bullish yet. We'll have to see whether it climbs over the RSI 60. Similarly, this is also bearish. The ADX trend indicator is showing it's still bearish on both the indices. So trend and momentum is in trouble, right? But sideways, it has climbed, reversed, climbed into sideways, but sideways, not at bullish, right? You cannot say it's bullish yet. Trend and momentum, right? VIX is behaving strange, things are cooled off. VIX is not spiking up as much, even when the market is making wild moves. VIX is staying below the 12. In fact, went below the 11 today. Well, so across the sector sideways, momentum is what you see. Different industry sectors, and auto and realty did well. IT, FMCG, metal underperformed. No clear. Yeah, so only the pharma and realty and both zones daily time frames. So right. So otherwise, that's a summary. So once again, this is an investment opportunity. If there is a dip set, getting in quality stocks. And for traders, you have to be cautious. You just can't predict the market. Market will behave whichever way it wants until the trend has emerges. Right now, it has not emerged. It is sideways. It attempted to reverse and did that beautifully, and then come to the bear zones. Bears are attacking. Counter attack is happening. This may go on. Market may go sideways. Then suddenly, it may decide to continue to rally up, or it may decide to make some more correction. So that's a market rules. You just can't predict. So you have to be cautious at this time when the market is unpredictable. This does not give any direction sense on the charts. That's the time we have to be extremely cautious. But there's also an opportunity where if you are managing the risk properly, you can make money in the options, non-direction strategy. But you have to be cautious, manage your risk. At shorter portions, that the is spiking above the 20, above the 15-20. That's the range. Let's play safe. That's all I have. If you're not subscribed, please try and share a difference. Happy trading, happy learning, happy investing. Bye bye.